All right, ladies and gentlemen, thank you for tuning into the Advisor Advantage with James Murphy. We are here today with Dan Sciortino, going to give us some fantastic advice for our financial adventure of buying a home, right? Would you call it an adventure?
It's definitely an adventure.
I would call it an adventure as well.
It's a journey.
It is a journey. Without further ado, let us get over to Dan.
All right. Well, thank you, James, for having me.
The pleasure is ours, Dan.
All right.
Tell us a little bit about yourself, Dan. What do you do? Where do you do it? And how well do you do it?
Yeah, so I'm a financial planner, investment manager with Fig Tree Wealth Management. It's an RIA based in New Jersey, which I'm the owner of and the main financial advisor there. So I help people plan for retirement, plan for their life, doing comprehensive goal planning, investment management. So we build custom portfolios for people and manage their money. And we also sell insurance, different types, whether it's, term life or long-term care insurance, disability, that kind of stuff.
Okay. Do you work a lot with first-time home buyers, or do you find a lot of your clients buying homes these days?
They've had some trouble these days, right? Obviously, because inventory has been tough, and the prices of homes right now is out of reach for some,
Somewhat.
But I've helped a lot of young folks plan for it. So even though, let's say right now they can't afford to buy a home, they've put plans in place to start putting money away, or whatever it is that they need to do, so that when the time comes, they can pull the trigger and buy something that's attractive.
Nice. So you are the guy they want to speak to prior to getting ready to buy the house, right? Or as they're getting ready to buy the house.
Yes.
So when you work with your clients that are getting ready to get into this journey, are there any specific tips that you give them? Anything off the bat that comes to mind when you're thinking about buying a home as a first-time home buyer?
Yeah. Well, when it comes to kind of preparing and saving up to buy a home, it's important to kind of start at the foundation and say, okay, if we're going to save for a home, right? When would we like to purchase this home, and where? What's the ballpark that we're looking to buy, and what type of down payment are we going to need, right? And to say, okay, well, why don't we start with a budget? And a lot of times people think of the budget as like, the B word. And, it could be husband and wife, or, whoever it is just like, ooh, a budget. I don't know. I think that means my Amazon packages aren't going to be coming in the mail anymore. And,
Right. It means I can't do something. I can't buy stuff that I want to buy.
Exactly. I can't do this. I can't do that. And a lot of times when people do it correctly, you can create a budget so that you know where your money's going.
Okay.
Right. Because similar to the way, sand just kind of slips through your fingers, right? A lot of times people's money just slips away. And it's not the big purchases. Right. It's always those little purchases that they do week after week or month after month that they're like, hey, we just have nothing to save. Like, I don't get it. We make good money.
Right.
It's those kind of things. So starting with a budget, that's definitely a tip to say, all right, let's lay it all out. What are we spending on? Right. And then budget in fun, right? Yeah. So if it is going out to eat, figure out, are we going to go out to eat once a week, twice a week? Where's it going to be, right? And stick to it. And when you budget in fun, you don't feel so bad about the budget. But that'll help you get to the point where like, okay, wow, we're actually saving a good amount. We may be able to afford a house in a year or so, what have you. So that's always a good start.
How would you suggest minimizing those little? It's like the death by 1,000 cuts, right? It's like those little. And I think of my own bank statements when I look at them now and then. I'm like, here's 120 here, and here's 200 here, and 80 here, and 90 there. Right. And honestly, I think right now, majority of that is like groceries, which is crazy.
Yep.
Grocery costs. But how would you plan to? I guess the budget is what stops you from doing that, right? Or sticking to that plan.
Well, you just brought up a good point, right? Inflation.
Yeah.
Grocery costs.
Yeah.
Most people don't know what that inflation has just done to their savings rate or to their future ability to reach a goal.
Right.
So they just continue to spend what they were spending before, without realizing what's going on. And they're still going out, oh, I can buy that shirt. I can buy that electronic. I can do this to that. Not realizing that, wait, I'm spending, this much more percentage on my groceries. And now that's eating away at my savings rate or my retirement rate, whatever it is. So the budget will help you to know, okay, this is what we're currently have to spend. And then this is what we're allocating to be able to spend on going out to eat, clothing, whatever it is. So you start becoming conscious when you're out there. Let's say you're at the mall, which nobody goes to the mall anymore, but I need that for the example. That, okay, I need to buy those earbuds. Right? You know what it's going to cost. And now you realize, wait a minute, I didn't allocate that for my budget. So if I'm going to spend $100, technically you can afford it, but you realize that now you just took that away from your restaurant money or from
Right.
your other stuff that you allocated.
Right.
So once you have that budget, you start realizing and you start building a discipline on what you should and shouldn't be buying because of the budget.
You took that word right out of my mouth. I was going to say it's important to be disciplined with your budgeting, right?
Absolutely. Some people do a cash system, like Dave Ramsey and some others have recommended, where every week you get your paycheck or every month, take the cash from the bank, put it in an envelope, and say I'm not going to spend more than this $100 on whatever it is, and that's what's in the envelope. As soon as you exhaust that envelope, you're done. Don't spend
Yeah.
anything else. That's the next level kind of commitment. Not everyone
Mhm.
can do that, but it does work.
Yeah. You mentioned Dave Ramsey. That's a name that I think many of our audience would know, would be familiar with. Did I see on are you certified with Dave Ramsey, or did you
So
do something with
I'm
him?
a Dave Ramsey SmartVestor Pro.
SmartVestor Pro. What does that mean?
So what that means is that when people go through Financial Peace, right, in his program, or they listen to his podcast or show, and they're like, okay, I've gone through the Dave Ramsey baby steps where I've saved an emergency fund, I've gotten out of debt, I'm ready to start investing for retirement, whatever that is. People will reach out to us as like a Ramsey solution. Yeah.
Dan, I'm excited to have you on the show because this is the part of the process where I'm usually involved, right? I'm usually the one that's, I was joking with an agent yesterday, and I was saying how you have the joy of being involved in the emotional aspects of
Right.
this, right? Where
Yep.
they're showing the bedrooms that they're going to, to live in, or the backyard their kids are going to grow up in. You know, then they come to me, and then they have to hear the numbers,
Right.
and then the costs, and what they have to do to get approved, or if they are approved, or if
Right.
they're not approved. So, having them speak with you before me makes my life a lot easier because you can put them in a position to be in a better position, I should say, by the time they get to me.
Yeah, that's a good point.
So, I mean, the tips that you're giving here are fantastic. What I've noticed a lot of, well, I shouldn't say a lot, but I've noticed many buyers do is tap into their retirement accounts for a
Right.
first-time home buyer
Yep.
down payment loan, or whether it's an IRA withdrawal or a 401k with loan. What are your thoughts on utilizing retirement accounts to buy a home?
Yeah. To answer your question right off the bat, I would say it's not a good idea to do it.
Okay.
When you get into the practical matters, it's if you withdraw money, which you're allowed to take out up to $10,000 from your IRAs for first-time home buying.
Okay. That's
Typically,
good
if
to
you
know.
take out money out of your IRA before you're 59 and a half, you get hit with a penalty. But when you do it for first-time home buying, there's no penalty, right? So that's 10,000 you can use. With a regular IRA, like a traditional / rollover IRA, there's no penalty, but you will have to pay tax on it because that's money that was never taxed. So if you pull out 10,000, just realize you're going to pay income tax on that
Right.
before you could use it. A Roth IRA is already taxed money, so there's no penalty, there's no tax. So it sounds like, hey, that's great. That's money I can use, right? Yes. However, what you're doing is you're robbing your future self of a retirement, of more extensive compounding.
Okay.
We've heard about the power of compounding, right? It's one of the wonders of the world,
Yeah, the
right?
compound effect is beautiful.
Yeah, so it's what happens, and when you run projections where even 5 years of difference of someone starting 5 years earlier than someone else putting that same amount away, it's like hundreds of thousands of difference because of compounding. So when you rob yourself of that 10,000, right, in the early years of saving, which is typically a first-time home buyer, you really hurt your future self. So that seems to be the trend, right, in our society. It's don't worry about today, or don't worry about tomorrow.
Right.
Satisfy today. That thing you want, just get it. Put it on the credit card.
Right.
You want that house?
YOLO.
Rob your
Right.
yeah, exactly. Rob your retirement account. So that's why we usually recommend not to. A 401k loan is another one where you say, okay, well, I'm not taking it out totally. You can take up to 50,000 on a loan from a 401k, and you pay yourself back the interest, which seems attractive. But again, that's typically is like a 5-year payback. That's 5 years you just rob yourself of compounding.
Right.
So it's the same concept.
Yeah, and I'm sure that money adds up a lot greater than many would realize.
Yeah, and I would say leave that option to pull out of it in an emergency situation. Like in some serious medical bill, something major happens, and that's all the funds you have. You tap into them, but not to buy the first home, unfortunately.
Yeah. We just mentioned compounding probably 5 or several times. Can you explain to the audience what compounding is? What's the
Sure.
compounding effect?
A good visual for compounding is basically a snowball effect,
Mhm.
right? So you start at the top of a hill, make a little snowball, and you roll it down, right? As it rolls down the hill, it accumulates more snow. And by the time it gets to the bottom, it's a big, right, snowball. Now that would be if you invest money one time and let it go. That's one type of compounding where whatever it grows, you reinvest, and it is a growing snowball. Now, picture running down the hill with that snowball and adding more snow to it as it's rolling down and
Right.
accumulating snow, right? That's a visual I like to share of what real compounding is, where you invest and then systematically through your paycheck, like a 401k or in a non retirement savings account, you invest monthly. And what you're doing is you're packing more snow onto that snowball as it's rolling. And that's where you really see that difference. Where if you can do an online compounding returns calculator and just play around with it. Say,
Nice.
okay, if I'm 30 now and let's say I want to retire in 30 years, and I start with $1,000 and I put $100 a month at 8% return, just the random numbers you can throw in there, hit calculate, and it'll show you like, wow, it'll be 500,000 by the time I
Wow.
turn 60 or whatever that number is. That's the beauty of compounding.
That's crazy. That's powerful in itself, and so many people, let alone buyers, have no idea about that.
Right.
Also seen compounding used for paying down debt, right? Pay off one card and use that payment and put it towards your next minimum payment on the
Right.
next card, then to take care of those two, and then so on and so on, carry each minimum payment onto the next payment.
Yeah, that's a big thing in the Dave Ramsey program is the debt snowball,
Okay.
where let's say if you have 5 credit cards, most people will say pay off the one that has the highest APR.
Right.
But what happens is when paying down debt, it's hard. And people get discouraged, especially if they go for the highest balance credit card first. They end up losing steam because they see it barely going down. Like, oh, so they give up. The Dave Ramsey approach is they pay off the smallest credit card first, regardless of what the APR is, because that becomes a quick win.
Yeah.
You pay that off in a few months, let's say. You're like, all right, now we only have 4 left.
Right.
Then you take everything that you were putting into that one plus to the second one. Then next thing you know, you get that second win and it becomes that snowball effect, but in reverse. And you're basically canceling out a credit card company getting your interest, right? So you're reversing the wealth. Instead of you making the credit card companies wealthier, once you pay off your credit card, you guarantee yourself, let's say, a 19% return, risk free, because you're just paying off that APR.
Yeah.
So it's powerful.
I love that.
Mhm.
Can anybody else see the excitement and the passion on Dan's eyes, into his eyes when he talks about
Passion and love.
this? You can tell you love what you're doing.
Yeah, I do.
With that said, I mean, although I think you kind of already mentioned it a little bit, how would you suggest buyers save for their first time home purchase?
Yeah. So once you create that budget and you have to get tight on it, right? So we say, man, we are spending a lot on this extra stuff. Get tough on it. Say, okay,
Mhm.
let's not go to this expensive restaurant. Let's just get pizza once a
Mhm.
week, right? You can still have a date night. You can still have a good time, but really carve out as much as you can to put towards savings. Once you have that amount, we say, okay, we can actually save $1,000 a month. Do some type of systematic investing to get it out of that bank account. Even if it's a high yield savings account that's separate from your checking account, get it away from there so you lose the temptation to spend it.
Right.
So if it's a high yield savings account, put it in there. If you can invest it in the market, sometimes that's a good idea, especially time wise. For instance, like when COVID happened, everyone was running for the hills. The market went down, 32% at the bottom. And when people are fleeing, that's usually when you should be investing.
Right.
Most people don't do that. They get nervous. They want to pull money out. So a lot of people that listened to me and said, I told them, put your money in now. It could go down further. I can't guarantee that it won't, right? I don't have a crystal ball, but a 32% discount is pretty good.
Yeah.
And the ones that did, and that market rebounded in just 2 months, they literally got their down payment overnight,
Wow.
right? Stuff like that. Right now, the market is down, let's say about 13% from the high. Still at a discount. Is it a good time to put money in so that potentially it could grow? Yes. You have
Mhm.
to be careful what your timeline is, because if you do want to buy a home in a year, let's say the market, some bad news comes out, the market goes down another, 10, 15%. Now your down payment just got cut, so
Right.
you got to be careful with that. But definitely systematically invest it somewhere, get it away from that checking account.
When you bought your first house,
Mhm.
right? What mistakes did you make that you wish you could go back and do differently?
Biggest mistake was I bought at the height of the market in 2007.
Oh, So did
when
I,
the
for that
market
matter.
had just dipped a little bit. I'm
Hmm.
like, oh, let's get in.
Yeah.
And then the Great Recession happened,
Uh-huh.
housing crisis. So we
Didn't feel
were,
so great.
no, we were stuck there for a little while. But yeah, I don't,
Yeah. It's funny you say that because I think back to when I bought my house, and I'm in the industry and I'm doing this for quite some time. Um, and I remember when it was happening, and I just got married. My wife wanted to buy this house, and it was the dream house. It was a house. It was actually a house that on Exchange Street I grew up on, and
wow.
I tell people I got real far in life, 2 blocks. Um, but so it was a friend's house, and it was the house that I grew up with my wife when we were young. So we knew the house. So anyway, long story short, she wanted this house, and I said, "Listen, babe, there's something going on in the industry. I don't know how bad this is going to get, but it looks pretty bad. It's getting
Wow.
bad.
Yeah.
This is right with all the banks were like closing down. Like I was like, you might have heard of this bank, Countrywide. I mean, it is these are pretty big banks that are just going under." And she's like, "No, now's the time." And even I had an appraiser
Oh, man.
who I worked with who appraised the house and said, "This is not worth what you're buying for. Are you sure you want to do this?" And I said, "Happy wife, happy life."
Oh,
And
yeah.
sure enough, we did. We lost at least 200 plus in equity after we bought that home. But happy to say, as in with all real estate transactions, I believe long term, it'll always come back,
Right.
right?
Yep.
Because we always need a house,
Right.
right? People, you can't create more land. You can just use what you have, what's
Right.
available.
Yeah.
And right now, there is such an inventory shortage out there that I've seen my value climb back only, 10, 13 years later, however many, and far exceed what we originally bought it for.
Wow. Yeah.
So I'm sure you're in a similar situation.
Yeah. I mean,
Right.
honestly, I think the biggest mistake people can make in general, which happens with investments,
Mhm.
probably happens with buying a first home, is emotions.
Yes.
Um, when it comes to the market, people get emotional, right? They hear something in a podcast, they watch something on TV, some kind of a commercial about buying gold and the end of America and like those kind of things that are trending, and people get emotional, they get worried, and they want to pull their money out, right? So the market's down 20%, they want to pull their money out, and
Mhm.
that's usually what happens is people tend to they buy high and they sell when the market's low,
Right.
and that's common with investors when it should be the opposite. And that's the number one thing that we do is people come to us and they say, well, what can you do for me? Like, yeah, we'll create a portfolio. We'll do this. We'll do that. But really, we're keeping you from making emotional decisions with your money.
Yeah.
When the market is down, we'll encourage you to add more, right? When the market is high, we'll encourage you to trim, take some profits. And those are the disciplines that over the long run will help you do well. So I would say be careful, when you're looking at a house that maybe is too expensive for you, but you just get emotionally attached and you start picturing the things around. You're like, oh yeah, we need this. We need this
Mhm.
house. Do you? You know,
Mhm.
that word need
Right.
versus want,
There's a big difference
yeah.
there.
So I would say that just being careful with the emotional part of the decision making.
I love that. I wish we had had this conversation back in 2006, 7. No, I'm kidding. I love
Right.
my house. I may have not purchased had I had this kind of wisdom.
Right.
Speaking of wisdom, I see you brought a book with you today.
I did.
And it happens to have your name on the cover, which
Yeah.
is which is always impressive.
I'm the author of it.
Oh, Prune and Prosper.
Yeah, Prune Prosper, abundant fruit through empowered stewardship.
Why do I have a feeling this has something to do with the name of your company?
So it does. You're right.
Oh wow!
So
I got
so
this like
wise.
psyche thing.
It's the whole wisdom
crazy.
thing you
It's
just talked
wisdom.
about.
Gift
So
of discernment.
the beginning of Fig Tree Wealth Management was really what I call like a spiritual 2x4. You ever get hit with a spiritual 2x4 in the back of the head?
Definitely.
So definitely a God moment where I was taking care of a fig tree for 10 years in my
Mhm.
backyard in that home.
You can get them from the food store, right? Like right down the road. Figs.
I know. But Italians, they don't,
Ah.
you got to grow them. You grow the figs,
It's fine.
Yeah, they don't taste the same in the market.
Listen, I'm Irish. We have a thing about potatoes, so I get it.
Yeah, right.
It's a thing.
Potatoes are easier. I think, right?
It's a lot easier. Yeah.
Bury half and then next thing you get 10.
Oh.
Right.
Fantastic.
And fig tree, I grew it from when it was a baby to the point where it was huge, and I just always struggled to get fruit from it. And it wasn't until the 10th year that it was a big tree. It looked like a ton of fruit had come on the tree. And I'm like, all right, this is our year, right? And I'd always been pruning. I pruned it. I know you're supposed to prune the dead branches. You're supposed to prune the living ones. I did all that. Ton of fruit. It's not ripening. And here we are, end of August, still not ripe. Beginning of September, still not ripe. I'm like, these aren't going to ripen. So here we are, another year in 10 years of no fruit. And it was frustrating because it was like a frustrating time in my life too, where I felt spiritually I wasn't bearing any fruit as well, maybe very little. And I had just watched the video. I said, how do you get these things to ripen? Because they don't ripen. If you take them off the tree and leave them on the counter, they won't ripen. They just wither and die. It's not like a banana.
Okay.
So I basically watched this video. The guy said, in colder climates, you have to take the leaves off the tree. The leaves are huge in a fig tree. They're massive. The stems are huge. So to me, it made sense. I'm like, okay, let me try it. I took the leaves off just one branch. 2 days later, only those started ripening. I said, wow, this works.
Wow.
I took the leaves took the entire thing, all the leaves off the tree.
Down.
About a week later, they all ripened and we had a harvest. I'm like, wow, this is awesome. At the same time this was all happening, I had just learned about something called biblically responsible investing, where basically it's a way of investing in the market through mutual funds or stocks where you remove or reduce exposure to companies supporting things like abortion, pornography, anti-family entertainment, tobacco, and so on. And that's where I got hit in the back of the head. It was like inspiration as I'm standing in front of this tree that just bore fruit. I never realized I had to prune the leaves. The same way I never realized I had to prune my investments. I had always pruned my budget, prune sin out of my life, different things. But I never thought like, man, I got to prune the leaves. I got to prune the investments of these things I never realized were in my investments. Here we are, a lot of, believers investing in the market, getting a return. Meanwhile, we're supporting the things that we talk against, or are against our values. And that was the beginning of Fig Tree Wealth Management, the combination of those two things. So yeah. Then I got inspired to write the book, which is Prune Prosper, which takes people through a journey of pruning not only their finances, like we talked about the budget, debt, prune that out, pruning investments, but also pruning their time. How much time are we spending on our phones looking at, useless things that really
way too much time.
Got to prune those momfluencers, because those will keep those packages covered, the cosmetics, the clothing. Sorry if my wife's listening to this, she's going to kill me.
Right. If my wife is listening to this, please pay attention.
And then lastly, so pruning time, and lastly is pruning our lives. Anything that's holding us back from bearing fruit or bearing more fruit. That's what the book's about.
Wow. That's fantastic. So you're not only pruning people's lives and helping them improve spiritually, but financially, you're pruning their entire budget, how they spend their money and how they save their money and everything.
Yeah. And my goal is like throughout the years, as I have these clients that we're pruning, a little bit at a time or a lot at a time, whatever it takes. But as the years go by, they start seeing the fruits. And I've seen that where clients are like, thank you so much for helping me with my budget. Thank you so much for helping my marriage. I've had married couples crying in my office because they were buried in debt. Major issues of overspending and this and that that we fixed, stuff like that. So it's definitely rewarding. And then people thanking me for pruning their investments, because once you make it a priority to surrender your finances, it's amazing how that opens the door for God to work in other areas of your life. Because people hold their finances really tight. Right. And when they open the door to you as a financial advisor, they trust you. Next thing you know, you become their pastor in a way, where you're helping them with all kinds of issues, But it is pretty powerful. And it happened to me where once I trusted and I said, you know what, just like Corinthians says, just like Psalm says, that God owns everything, the earth and everything in it. If it's not mine, I don't need to worry about it. I don't need to stress over it. So if you're stressing over money and finances, which is common, let that be the indicator light that something's out of balance, that you're trusting in yourself, you're trusting in your job, you're trusting in your finances. Reverse that and start trusting in God, that he'll use that to feed your family. If that well dries up, he can make water come out of anywhere. And that really is, I've seen people live in peace that way, as opposed to always being anxious and stressed.
Wow. Dan, if I could pick up this microphone and drop it, I would. because that was
I
powerful.
thought you were
The-
saying you're gonna hit me over the head with it.
no, my brother, that was a fantastic message, and definitely mic drop worthy.
Awesome.
We talk about these clients of yours. Does anybody come to mind? Any family come to mind that you've helped and just maybe not just helped financially, but spiritually, physically, emotionally? Have you just? I mean, is there a family that comes to mind? You don't have to mention names, but tell us about that story if you can.
Sure. It's funny. So actually my very first person I sat with as a client. Now here I am at zero salary, starting,
Hmm.
and I'm like, okay. First client turns out to be a young lady, no money, buried in credit card debt, buried in student loans, buried in overspending, which was a spiritual issue, believe it or not. And here I am sitting there saying, like, wow, I'm not going to make any money here because I'm not going to charge her. I just feel,
Right.
even though I could.
Right.
So that'll be the best money she ever spent to get her out of that.
Uh-huh.
I felt in my heart, no, don't worry about it. God will take care of me kind of situation. And yeah, I helped her get on that snowball program, create a budget. And I'll tell you, it was like we dug into the spiritual issue of the overspending, prayed about it, and told her, start thinking about your future self. Like picture that girl in the future. And what you're doing to her today, you're hurting her, right?
Right.
Start changing today so that you help her in the future. And sure enough, a year later, I see her on social media and she's happy, out of debt, saving, just taking all the right strides, and how that helped her, in her finances, but also helped her spiritually. And that was huge. And to me, that was a seed that I planted. I made no money off of, but I knew it would be a future blessing, so that's a big
Awesome.
one. Mhm.
And I'm sure that was worth well more than the few dollars you would have made
Oh yeah,
there.
big
It's
time.
it's like playing the 50-50 at your church or your school function, right? It's like part of you doesn't want to play because who's really going to keep that money, right? I know myself, I'm going to be the one
Yep.
that's like, here you go.
Right, right.
Have it,
Yeah,
keep
yeah.
it all,
Right, right.
everybody. It's
See
fine.
ya. Yeah.
But you're doing, you're doing a great thing and you're giving back and helping them raise money.
Right.
Speaking of great things, we're just about at the end of the show already,
Sure.
which I cannot believe we're already almost done with this. Um, excuse me. And we're going to end the way I always like to end these shows. This one was a little bit different because we usually are dealing with just, your real estate agents or specific professionals. But I loved your insight. Honestly, I thought you
Great.
brought a lot
Thank
to
you.
these buyers. So anybody out there that's looking to purchase a home, this is some fantastic advice because we got to get your ducks in a row, right?
Yep.
Before, as they say, before you got in the home. So thank you for everything. But before we end it, I want to ask you to leave us here with what I like to call a parting piece of pie, right? And I'm an acronym freak. I say this every time. Pie is an acronym for something profound, something inspiring, or something entertaining. So tell the audience before we leave here, give them something to leave with. Piece of pie, profound, inspiring, entertaining.
So I would say, kind of in summary of some of the other things we talked about today, right? We see that like anxiety, depression is really a pandemic now, right? A lot of people struggling with that. A lot of people feel lonely, right? Disconnected, all that kind of stuff that's happening right now. And going back to the original thing I had mentioned in like Corinthians and Psalms where it says God owns everything. Typically that never struck me as something I, hold on to and relate to finances or my life, anxiety, this and that kind of stuff. But when you think of what's triggering your anxiety, what's robbing your peace on a daily basis, it's usually things that you are trusting in, right? And when you let go of that trust and say, you know what, I'm just going to be content with what I have. And if I can get more, awesome. I'm going to work for it. I'm going to get it, but I'm going to be happy with what I have today. That's a foundational piece that a lot of people are missing. It's okay to work hard, to strive to get that shore house, whatever it is, right? To buy that first time home. But be content where you are. So if you're renting right now, don't feel miserable, like, oh, I'm miserable renting, that my life stinks. And once we get that house, I'll be happy. No, learn to be content with what you have today and strive to get that extra because you'll have peace today. And then when you finally get that first time home or get that shore house or that thing you're striving for, you're going to enjoy it. You're going to be content there and you're going to have peace about it. And that's a much better way to go through life than just constantly anxious, feeling like you don't have enough, And I would say that's a good thing to close on, for someone looking to buy the first home.
I don't think there's one person out there that hasn't felt the anxiety that you're talking about here. The anxiousness of worry and fear, and the absence of peace and joy. And wow, that was good stuff. And something we should be all focused on, whether it's through buying a house, investing for retirement, or just living life.
Yeah,
Right?
and like my brother always tells me, no matter what I do, since I was a kid, if I was going to do a recital or a big presentation at work, whatever it is, he would just say, you know what, and Dan, just have fun. And it always stuck with me. You know what I mean? Like whatever you're doing today, whether it's you going to the kids' game or, to work or whatever it is, just try to not take it too seriously. Have some fun.
And that is how we should end it. Great advice from a great man to a great audience. We have been hearing loads of wisdom from Dan Sciortino with Fig Tree Wealth Management. I was looking at your book, Prune and Prosper. Let's give that one more plug. Can anybody buy this book
Yeah,
somewhere?
it's on Amazon.
It's on
Yeah,
Amazon. Ooh, Amazon. Fantastic. Well, we'll see if we can link something here to your social and all other stuff
sounds
so someone
good.
can find you. And I want to just thank you and also thank our audience. Thank you for tuning in to the Advisor Advantage with James Murphy, where we are giving you the advantage you need for the experience you want. We'll see you on the next show.